The debate on the Titan CaratLane deal. A lot of opinions have been floating around. A lot of people have been questioning the valuation which Titan is going to pay to acquire CaratLane. It's important to note that this is not just a straightforward acquisition. It is a partnership in which a senior partner with a larger share of ownership wants the minority partner out. It wants to own the whole company. Importantly, the minority interest is significant. It is above the threshold which allows a senior partner to have his way. So the minority interest is reasonably well protected by the ownership structure itself. Importantly, in a partnership, whether you are majority or minority is not so important. What is more important is the contribution of the partner towards the success of the enterprise. If partners have contributed significantly over time and without regard to their shareholding have played a significant part in building a successful enterprise, then that part needs to be adequately recognized. Only then would a minority partner who has contributed be willing to part with his shares. Otherwise, he would think, why would I part? Anyway, if I just stay invested, I'm sure this company will keep growing for a long time to come, and I could always sell my stake at a later date. Imagine you were Mithun Sacheti having these stakes in CaratLane, and imagine you take a position that no, I don't want to sell today when the forward revenue is 3,000 crore. Let me wait for this revenue to become 10 or even 20,000 crore. Then the larger shareholder has to simply accept that. He cannot have his way and say that now I don't want you as a shareholder. He would have to wait till you decide to sell. So if he has to convince a minority shareholder to sell, then he has to make an offer which the minority shareholder will not refuse. And that offer has to normally be something which is definitely out of the ordinary. Now, is it wrong to make an out of the ordinary offer in these circumstances? I think not, because if you look at what Titan is paying for the whole enterprise of CaratLane, it's not too much. They paid 357 crores when they bought out Tiger Global, and then they put in another 100 crores, which is 457, and now they are investing 4,621 crores to buy out Mithun Sacheti and his family members. So the total outlay is just above 5,000 crores. Now, along the way, Titan didn't invest too much money. Today, the bulk of their investment to acquire the whole of CaratLane is clearly backloaded. It's definitely on the back of evident success, 3 years of profitable track record, a very good visibility of growth runway, a well-established model, a model which is premiumizing their business and scaling the premiumized part of their business at a faster rate than their conventional business. All these things cannot come cheap. It has to come at a price. I think that investors think that anything can be built if you have capital. It is not true. You look at the other players in the online jewelry market and you will understand how much they are bleeding, and ask yourself the question, how long it will take for these companies to get to profitability. Then ask yourself the question, is it even worth buying these companies at this point in time without visibility of profitability, and you will definitely not feel too enthused about it. But invert this question and say that if there's one company which has the model right, which has the economics right, which is profitable and which is scalable and which is going to grow with extremely strong return metrics, then should you pass it over? And the answer is obvious. And that obvious answer is what the board of Titan has weighed in their minds before they came to this valuation and decision. I personally think for the whole enterprise they haven't paid too much. And for what they are paid, over a period of 10 years, I think the returns should be significant because the growth will be outlier. And the return metrics will also be superior even to the existing Tanishq business, because the business they are going to do has a better scope for value addition. It's based on the brand perception, and Titan is a past master in managing that. Whereas if you're just selling gold jewelry, it's not very difficult to do that, and there are serious limitations. But when you go and sell diamonds or other precious stones, then your capacity to do value addition definitely expands, and branding has a very significant role to play. India is a market where people want opportunities to spend their wealth, and probably luxury is one of the topmost such spending opportunities. And to own a luxury company which could become a multi-billion-dollar enterprise over the next 10-15 years, to own the whole of it should be a priority of any board, and I think the Titan board has weighed this priority correctly and come to a sensible decision to own the whole of the company and part with their partner. The partnership, of course, has been fair, equitable and amicable, and that's again going in favor of the Titan group and the whole ethos of the Tatas. Thank you very much.